This is Brian Shannon from AlphaTrends.net. It's Thursday, the 17th of July, 2008, and the market's closed. We're going to have some big earnings reports here coming up shortly, and perhaps we'll take a look at those by the end of this video. But the S&P 500 did follow through yesterday. We saw that the buyers took back control of the market. I said it looks like it was probably headed up towards that 126 level. We did see 126 actually taken out today, but then closed just below that level. So this prior level where we'd found sellers was once again an area where they did congregate today, and that occurred after this little trend line here had been broken. And I pointed to the market on the blog just under here that it was encouraging that there were two stocks up for every one that was down. So right now we still continue to see that the path of least resistance here in the short term is higher. We drill down to a 10-minute time frame in here, and you can see that not only is the 5-day moving average flattened out, but it's starting to rise a little bit as well. So the buyers do have back that control, and perhaps we're setting up a little inverted head and shoulders in the S&P 500 as well. We'd seen one yesterday in the Qs. If so, that would indicate very conservatively from 121 to 126. The height of that is 5 points up towards 131. So if we look at the daily, let's look at this hourly time frame, or I'm sorry, the 60-minute time frame. That would suggest a move up towards that level. And here you can see that this larger downtrend line was also what was holding this market back, and that broke. So I think that you have to be encouraged here, but also still cautiously optimistic, because we are in a primary downtrend on this daily time frame, and we've got all these earnings reports. The volume is starting to diminish here a little bit in the S&P 500, and a retest of those lows wouldn't be a bad thing before the market can continue higher, because again, the bottom is a process. It's not an event. It's not a one-day thing typically. For now, I think though you can give the benefit of the doubt to the buyers as long as this pattern of higher highs and higher lows continues to hold. And right now, I think the important level is it could be even as low as 125. Depends on how aggressive you want to be with your stops. 124 is probably going to be more significant, because that's about where this 5-day moving average might rally up and meet prices if we're to see a decline. So continue to be cautiously optimistic. As I said yesterday, we're in a primary downtrend, but short term the buyers have taken control, and these things typically can run a couple days. And again, provided we don't get some kind of huge surprise from one of the larger companies reporting today. Oil continued to get hit. I was thinking, maybe this is Merrill Lynch selling in here. They were talking about how Merrill Lynch was trying to sell stuff to raise money, and before their end of quarter. But anyways, the market undertook this, rather took out this level of support right in here. And the way this market is looking now that it's broken this support and below the 50-day moving average, but the 50-day moving average is rising. Clearly in here we've got a short-term path of least resistance is lower. That is very clear to see. The daily time frame, we have taken out these lows, but with a rising 50-day moving average, I think it's very similar to the way that gold actually topped out, is that we had that large sharp sell-off, but then we had that that rally in here that led to the next leg lower. This market, oil, if you're looking at selling short, I think you're too late down here at 118. After it's dropped from 118 to 105, and I use this USO because I don't have a live quote of the oil futures, but I think that maybe another day of weakness, or even just we begin to bounce a little bit here. The next rally would be where I would be thinking that you want to get involved if that's your if it suits your risk parameters on the short side. And I think the way to do it would be with this DTO. And look at the leverage this thing has. This thing's gone from 21 up toward just under 27 today. So keep your eye on this oil, but it's getting a little stretched here to the downside. And with the primary trend still higher, these you're typically going to see some kind of short covering rally before the real drop kind of settles in. The IWM had a great day again here yesterday, where I said that perhaps it's at a level where we're going to see some backing and filling, but these prior levels of support tend to act as resistance, but they're only there as a reference point. You want to look at it and say, that's where there's likely to be selling. But if the selling doesn't materialize there, then you want to look at what you're seeing on the chart and trade accordingly. This market broke past this level of $68 a share, and then found support just above it as well. And I said that, basically it looks like, the next potential level of supply to be released to this market was going to be found at about 69.5. That's about where the high was today in the IWM. Let's take a look at and see what that number was. The high today was 69.53. It looks like. So the daily time frame, we saw that this 64 level or so has held as support for now, and we're getting this bounce. It's going further than I expect here, but again, suspend what you believe and trade what you observe. Again, the pattern of higher highs and higher lows is what pays here. And on the short-term time frame, I think 68 is now your short-term key level of support that if broken, then perhaps it's going to need to heal a little bit more through time, and the aggressive longs would probably move to the sideline in here, and I think that's the right way to look at it. The XLF had another big day, up almost 5%. Huge volume in here today too. So, and right up to that level where we're looking for the next potential source of supply to be released. What would be very encouraging in here actually would be a pullback at this point, maybe down towards 19.5 or so, and then build for a rally that would complete a right shoulder and then break past this level. Still a very damaged group here, and best left for only the most aggressive traders. You can see that we're getting up towards that downtrend line as well. So be real careful in here. Obviously, if you're trading, I said it yesterday, the short-term trend is still higher. So selling short right now doesn't make sense. You could look at this and say, well, maybe it's made a lower high and then breaking below here, 2013. Then you might see a little bit of a pullback, but again, only for the most aggressive traders to get involved in there. The NASDAQ 100 is making its way up to that level where we thought, I said 2 days ago, breaking past $45 a share would likely lead to a move up towards this next level of potential supply to be released to the market at 46. And you could kind of build the same scenario here, that on this time frame that maybe we're going to get to that 46, pull back down towards 45, build a right, 44.5, 45, build a right shoulder, and then continue higher. Very speculative, very early to be making any such calls. That the daily time frame is still severely damaged, so just continue again to focus on the definition of trend. And right here in the 10-minute time frame, I think that you've got to look at that 45 level, just below 45, as a key short-term level of support for this market.